Despite the Fed's mantra of higher for longer, investors are still betting on cuts. According to BofA Global Research, growth stock funds saw inflows of nearly $2 billion this week, while value funds saw the opposite, outflows of 2.6. Growth traditionally outperforms value in a low-rate environment. That's exactly what happened after the softer-than-expected CPI data renewed rate cut hopes this year. The S&P Value Index falling, while the growth index is up about 2% since Wednesday. My next guest is still sticking with value, but says the Fed has to start easing now. Let's bring in Vahan Janjigian. He's Chief Investment Officer at Greenwich Wealth Management. It's great to have you back. Welcome. How are you?
Thanks, Kelly. It's great to see you again. Thanks for having me back.
I wanted to kind of wave the red meat at the bull here a little bit by quoting the declines in value. Michael Kantrowitz was pointing out earlier this week that value factors have done quite poorly. But if you define value as really quality, that quality is outperforming more than ever. So anyway, the podium is yours.
Well, I think we're in a market that's dominated by momentum, and we're seeing the stocks that are going up continue to go up, whereas the stocks that are not going up are not doing anything. And right now, the market is really being dominated by a small handful of stocks, especially NVIDIA. You know, it's very hard to find a market index that does not include NVIDIA that has done better than the QQQ, for example. So, you know, this is a difficult market for value investors. But, you know, you mentioned a decline in interest rates being good for growth stocks. I think a decline in interest rates would also be good for dividend-paying stocks because it makes the present value of those future expected dividends greater.
Sure.
And it also makes them more competitive against bonds.
So is NVIDIA a value stock?
I don't think so. It was a value stock at one point. In fact, in 2022, I was a buyer of NVIDIA because I concluded it was undervalued. And I not only bought NVIDIA, I also bought Google and Amazon and Meta. Those three stocks I've held on to because they're no longer, I mean, they're still a good value in my opinion. NVIDIA, however, appears to me to be very overvalued, especially on a price to sales basis. And, you know, the other reason I sold NVIDIA is because I have a lot of exposure to ETFs, including SMH, QQQ, and FPY. NVIDIA is now 25% of the SMH. So even though I sold the stock, I still have a lot of exposure to it.
So why, and maybe I'm overstating, Vahan, I think of you as a value guy, but maybe that's putting it too strongly. I was going to ask why you have exposure to the triple Qs. That's like the ultimate, it's not meme stock territory, but that's close.
Okay, because I'm not roaring kitty. I don't put all my money in one stock. I want diversification. I want to have exposure to all sectors in all industries. So I own QQQ, I own SPY, I own DIA, and I also own SMH. And I also own a bunch of other ETFs, and I also own individual stocks in other areas. So I'm a financial advisor. I have to manage money responsibly. I can't give my clients too much exposure to one stock.
Yeah, and so that's what brings us to some of those individual names you mentioned, which now people go, you know, IBM, Verizon, Pfizer, you know, get us excited.
Yeah, these are stocks that are out of favor, and I like to buy things that are cheap. And if nobody wants them, I get interested. You know, all three of these stocks, by the way, pay very generous dividends, and all three of them have been increasing the dividend every single year for a long period of time. So, you know, eventually I think they will come back in favor. You know, these are not the kinds of stocks that are going to double in value every time you blink, but I think they'll do well over the long term.
Kind of a quirky last question for you. Michael Hartnett at BofA was out with a note this weekend talking about what he's calling the cash bubble. And we were just talking about this divide between how consumers feel about the economy and their ability still to spend, generally speaking. Is there, and the Journal had an article about this recently as well, that Americans are making a lot of money off of their cash. And I'm just curious, that dynamic, people say, oh, there's $7 trillion over the number is of cash on the sidelines. Well, is that cash happy to be on the sidelines and you know, compounding in value? Just your thoughts on that.
Yeah, and I'm one of those people. I do have client money in treasury bills, in short-term treasury bills. I mean, if you have a situation where you can get well over 5% on bills that are 1 year or lower, you should take advantage of that. Now, of course, not everybody's making money on this because there are a lot of Americans who don't have cash available. But those that do are sitting back and generating quite a bit of income from those treasury bills right now.
Yeah, and I just think it's a significant part of what's going on here. Vahan, always a pleasure. Thank you for your time today. Have a great weekend.
Thank you, Kelly.
Vahan.